Hello, it is the 7th of June, 2011, and welcome to today's Silver Log, still within this range-bound market between roughly around 33.5 and 39.5. That's approximately a 20% range, and it's just bouncing back and forth along amongst this range. Usually, the longer you are trading sideways, the bigger the breakout or breakdown tends to be. Therefore, I guess the market will stay neutral as long as it's within the sideways consolidation. As far as the hourly chart is concerned, it built a head and shoulders pattern yesterday and was not able to break down through this support level of roughly 3660. It came back up to the 5-day moving average, reached above it, another test of this Fibonacci, and now it's at a major level because it's at an area where we had previous resistance at the resistance of the shoulders is where it's come towards, as well as the 5-day moving average and this 1-day moving average, all at the same time, and that's so far where it's bottomed out. And this is a big area where if it wants to do something to get this direction in an upward trend, this is where it's going to happen, because a breakdown below this level most likely means a test down towards it, down in here at 36.5. However, if it can come back up towards this level, I'd be looking for a breakout, and the next significant level of resistance would work roughly towards this 38 level. As far as the volatility on this silver market, still within this trend where maybe it's going to make this inverted head and shoulders pattern. If that's the case, the volatility would have to come into play now. Doesn't look like it will, and again, if the volatility goes higher, most of the time, that will mean markets heading lower. Finally, this weekly chart, the chart that I'm going to focus on mainly for this week, because the band of averages is within an uptrend, and because it's within the uptrend, that's going to keep this market on a bullish level, but it has to do something with it now, or else within next week or the week after, this thing's going to go sideways and the market will head towards that of a neutral state. But when you've had this nice little run up, as we've had a major market in a consolidating period, and the bigger the range, or the longer that it corrects through time, the bigger the breakout or breakdown is going to be. And it was a pretty big breakout and had a nice pattern of higher highs, higher lows. The January selling came back to this level, got above this band, and now it's trading within this sideways consolidation. Therefore, if it can manage to break through this trend line, maybe this thing will get going, but it's still got to really get above here. The 18-period average of highs right now is at 38.93, and 39 is just a massive level for an area of resistance. And thank you for watching, and have yourself a magnificent day. Bye-bye.